Thank you all. I'd like to start to echo what the three previous speakers said in terms of welcoming the hospitality that we receive here in Ghent. And the reason why I kept my scarf on, which Minister Vincent van Petegem gave me, is not because it's a bit cold in here, but because I thought it's a nice symbol of the atmosphere that should reign on a football pitch, which is fair play. And I think fair play is also useful at European Union level. And this fair play has helped us to have a good, frank, and useful discussion today on the Capital Markets Union. This is also due to the fact that the preparation that the chairman of the Eurogroup and his team has done, and the EWG under the helm of Thomas, who was just renewed, was excellent, because I think we have a holistic discussion and everything's on the table. Now, we at the ESM share the view that it is urgent to act on the Capital Markets Union, and we fully support this effort. Europe needs a more integrated, deep and liquid capital market. The European one is 4 times smaller than the one of the United States. And this has also an impact on our competitiveness and our strategic autonomy. So I have underlined how important it is that we have more money available for green and digital investments, which is an absolute priority, but there is also lots of other priorities, including defense. I'm not going to give you additional numbers, because the ones that Christine Lagarde has mentioned in the meeting tell the whole story. I would like to say that on the very tricky topics that are about harmonizing national corporate insolvency frameworks, or on another tricky one, which is the common European approach to capital markets supervision, we should also see what we have done in the past. In the banking union, we have achieved a lot in the single supervision mechanism, and we can learn lessons from it. I underline that. So yes, it is difficult to agree on all of this, but we have had a good example in the past that can inspire us. Last but not least, I mentioned the capital market of the United States is 4 times bigger than ours. You could also see that the US pension fund assets stand at a level that is 6 times higher than what we have in Europe. So there's an area where we should and must develop new products for the benefit of our citizens, but also for the benefit of our economies. And last but not least, if we succeed in having a capital markets union, we will spur growth in the European Union. And spurring growth is the best way to comply with the upcoming Stability and Growth Pact, on which we have agreed recently, where there's a trilogue agreement. So Europe has delivered on this, and the capital market union can build on this new Stability and Growth Pact.